Welcome back, guys. Today we have with us the stock market titan. He manages stock and asset management and is a part of our Discord. Link will be in the description. And we have an exclusive interview for you guys today.
Happy to be here. Happy to share how to some good trading information here.
All right, yes, sir. Thank you so much for your time. All right. So, if you don't mind me asking, how did you actually get into trading? What hooked you about trading?
So I've actually been trading for 7 years now.
Mm-hmm.
I first started trading when I was a teenager, about 15, 16 years old. So I was working a job and I saw online some guy on Instagram and he was posting like kind of like his highlight reel of his trades.
Mm-hmm.
And I saw like crazy money. He would make $800 in one trade, which for me that's like a 2 week paycheck as a teenager. That's kind of what roped me into trading and made me want to learn it.
Ah, that's dope, bro. That's what really happens to most of us when we see trading. Because I remember my first time I really found out about trading was at the time I just came to America and somebody was showing me a Robinhood account and it had like 30,000 in it. At the time, I'm like, 30,000 is crazy. Every one of us has a beginning and it's really cool to always hear about it for sure. And how long did you think it took for you to be a consistently profitable trader? Because I know you've been
So it took
trading for, like you said, for me, 15, 16. So it's
So it actually took me a while. I know most people get it in 1 to 2 years. It took me almost four, but realistically about 3.5.
Mhm.
That's where I was able to achieve consistency. Before that, I was just like any other, most of these funded traders out here, they'll have big up days, big down days, and they won't really make any progress. And I was stuck in that for about a good 3 years.
Nah, that's true, bro. All of us did that. That's crazy. Big ups and then big drawdowns. But it's good that we actually stick it out and still persevere. Because I feel like you can't actually do trading if you don't genuinely have a passion for it. Because it'll definitely strike you out.
Yeah, definitely. If you don't love it, then as soon as you keep getting to those big
Mm-hmm.
losses, you're going to quit. That's why so many people actually fail at it. But
Mm-hmm.
absolutely.
Now, speaking of failure, can you recall your biggest losing day? What was the biggest trade you ever lost?
Biggest trade I ever lost. So in terms of capital, there's been some big ones. Obviously, when you're playing with large size in the fun world, that's obviously a big dollar amount. In terms of portfolio amount, I guess that would technically be the worst loss. When I was probably around 18 or 19 years old, I saved up $3,000 and in 1 year I got it to about a little bit over $80,000. And in one trade, I full ported the whole entire thing and it went effectively to zero. So it was pretty much a 99% account drawdown, and that was still to this day by far my biggest loss.
And see, you're
Yep, still here. That loss was actually the turning point. That's when I finally became profitable. So definitely a lot of lessons learned in the losses.
and that's the thing about the whole not even I think a lot of people don't understand how trading is just life because it teaches you so much about discipline. It teaches you so much about rebounds and how the ebbs and flows of everything. Because even today, I was telling a coworker, I was like, "Yo, they wanted to learn how to trade," and I'm like, "I could definitely show you how I trade, but it's gonna be up to you how you actually execute this because you're gonna find sometimes when you see your money disappear and you're gonna want to stop and you're never gonna win like that. But it's like you just have to keep going, bro."
Right. Can't have like gambler's mindset, the quitter's mindset, two polar opposites, but both are going to hurt
Hmm.
you in the long run.
And I'm speaking of like profitability. What's your go-to setup that you use on a daily basis, if you can share it with us?
Yeah, sure. So there's three main strategies that I personally use and that we operate in the hedge fund. The one that I recommend to people, just because of how easy it is to learn and how easy it is to use, is called squeeze trading. I'll share my screen here just to
Yes,
show.
please.
You see this?
We watch that stream. Yes, go ahead.
Perfect. So this is just Thinkorswim. The squeeze trading, the people in the Discord know about it. We teach a little bit there. We teach on YouTube. But for people that have never seen this before, basically, we have this indicator down here, the TTM squeeze. And what this measures is basically the movement of a stock. When it's green, there's no squeeze, and when it's red, there is a squeeze. And
Mm-hmm.
what a squeeze really just means is that it's consolidating. So the whole point of this strategy is we want a squeeze because that means it's consolidating. And then we want to enter and wait for a breakout because all consolidation ultimately has to break out. No stock will
Mm.
consolidate forever, and just how no stock will go up or down forever. You need to balance out rallies and sell-offs with consolidation just to, equal everything out.
And
This is the
when you
scanner we
say
use.
breakouts, sorry to cut you. I'm really sorry to cut. So when you say breakouts, you generally mean either breakout in an uptrend or breakout in a downtrend, right?
So you can play the squeezes either way.
Mm.
Market generally trends up, and we stick to bullish trending stocks. So we only play bullish squeezes. But by all means, there's people out there who do bearish squeezes. I just personally don't think they're that good. But everyone's different. But we,
Yeah.
we stick to the bullish squeezes only.
All right, perfect.
Yeah. So for this, we have this scanner right here. This finds all the squeezes. So, we don't have to sort through hundreds of stocks manually every day. This is the 1 day squeeze. If you go to scanners, we have a bunch of time frames. If we go here though, we just start with one at the top. And what we do every day before market open, we just go down the list and you'll see some high quality setups, you'll see some low quality setups, and then it's our job as traders to figure out which one is the best, or maybe the top 1 to 3 that we're going to focus on for the day.
Mm-hmm.
And those are the ones that we set because we don't want to be focusing on 20, 30 stocks at once. One, because it's just too much to handle. You're going to be missing things in some for noticing other things in low quality setups anyway. Just focus on the top 3. For an example, I'll just use this one. This is a trade we actually took. So we entered right here off the 50-day EMA.
Which
This
one
is
is that?
another. So that's the dark blue. Right here we have the 10
No, I'm saying
EMA is
like
the yellow.
which stock is that?
Oh, this is TOST.
Toast Inca?
Toast. What's that?
What is toast?
Toast? That's asking the wrong person. So basically, so what that's the other thing about the strategy actually. A lot of strategies they revolve around macro analysis. This is
Uh-huh.
purely technical. So it doesn't
Ah,
matter what a stock is doing. We won't trade penny stocks,
yeah.
but anything above that that's a high quality stock with enough liquidity, we'll trade. So even though there's hundreds of stocks that I have no idea what they do, but if the technicals line up, if there's enough liquidity, we enter it. So that's actually a good point you brought up.
Mm-hmm.
But so for this example, obviously I explained we have the squeeze. It was red, so that signals the squeeze, so we're allowed to enter it. We use the RSI just to measure the strength. If there's any weakness or divergences, we use the volume here. This is a special script that it separates the bullish from the bearish volume. This is not needed, but it definitely helps a lot. And then for the EMAs, this is the most important part. The EMAs determine when to enter and exit the trades, and every decision is basically made off of them. We have the 10 EMA is the yellow, the 21 is the white, the 50-day is the blue, and the 200 is the dark orange. So we entered right here. Basically how this goes, you can see we have an alert set here. So this alerts us when it drops below, and
Mm-hmm.
this is
Yeah.
basically our buy zone. What we do with these squeezes is we draw out 2 levels. So this is the top level. We see this, and this is very basic. This is why I recommend it to everyone when they start trading. This is one of the simplest strategies that you can possibly learn. So we have here this top level, which is resistance, this bottom level, which is support, and we have a squeeze.
Mm-hmm.
That's all we need to see. We have our alert set here. So people range trade this. People do a whole lot of things, iron condors, non-directional trades. What we do is we just wait for it to drop to this support level here and we buy, and then we wait for it to get up to this resistance level and we sell. And it's that easy. We also keep some runners in case it breaks out, which oftentimes with this strategy it does. But when you're just starting out, you want to be conservative. You don't want to take too much risk. So I always just recommend buy low, sell high. That's the classic quote that everyone always simplifies trading to be. But if you
Mm-hmm.
do this, you buy at the support, you sell at the resistance, you have a squeeze, and you make sure the volume lines up. You want the EMAs to be acting as support instead of resistance. That's pretty much the entirety of the strategy. It's not complicated at all. And yeah, it's one of the simplest things that we use every day.
All right. It's a good thing because sometimes not everybody is like they're getting introduced to the stock market. So this might be a nice strategy for you.
Yeah, so if people are just starting out trading, I always recommend for them to use this. A lot of people recommend, I know ICT is popular. There's a bunch of SMC concepts. There's a bunch of, you could basically find a strategy that revolves around anything. I know there's strategies out there that revolve around the lunar cycle, the moon and the sun, the planets. So there's literally a strategy that you could find on anything you wanted. But after learning hundreds over the course of the past 7 years, this is one of the first ones I learned and also one of the easiest ones you could do.
My boy said hundreds.
Probably, maybe even thousands.
Yeah, man, you have to put the time in to get this. Like anything in life, you just have to put the time in. And it always shows the results. So speaking of, I noticed that we just had in my head, so I'm understanding where we would put our stop losses and all that stuff. But in my head, I'm thinking, all right, once this breaks support to a certain level, that's when we're gonna get out. Say for instance, we were actually playing a squeeze, but for normal people or people who actually see this, how would you describe your risk management, your stop loss, your sizing, all that?
Right. So yeah, risk management is obviously the most important part of any strategy. Without good risk management, you'll never make money. So what we do, and the best way to do this, if you search up squeeze trading on YouTube, you'll
Mm-hmm.
find a lot of stuff. Most of it isn't very high quality in my opinion, and they don't teach you how to do this properly. So the best way to do it by far is we have our support obviously. So this would be where our stop loss is, and you can see our entry is very close to our stop loss. We're not going to be entering somewhere up here just trying to catch a small move and then risking
Yeah,
an entire drop back down to support where our stop loss is. We're
exactly.
entering very, very close. So that worst case scenario, if we break support, since we only bought, a dollar or even a couple cents above,
Mhm.
even with very highly leveraged options, you're only taking a 10, maybe max 15% loss. And what we do is not only that, but we also wait for a close below the level. What that means is, for example, take this candle right here with this long wick down.
Mm-hmm.
Since this didn't close below the support, this setup is still valid. It's still in play. It's perfectly fine. As you can see, we played it multiple times since then. But we entered here, this big red candle before it. When it came down, hit our alert. We saw here that it went below, but we didn't exit because it didn't
It
actually
was,
close below this
yeah.
level. It ended up closing all the way up here.
Uh-huh.
And that's the other key. If they're having long wicks down, that's usually a lot of times just retail traders getting shaken out. And that's why a lot of them lose money, even with a strategy as simple as this. You want to make sure that you're monitoring it and not falling for these little bear traps right here.
Even today, I learned that
A
the
lot.
hard way, getting closed out because when we see a big wick like that, it does something to you mentally where you're like, oh, this is it. And 9 times out of 10, for the most part, unless it closes in your stop loss, you're perfectly fine.
There's a lot of times where it'll go down, it'll 9 out of 10 times, like you said, it'll go back up. There's very few cases where it closes below and goes back up. So that's why we do that. If it closes below, it's a very small chance that it's going to get back up here. Does it happen? Yes, but it's not probable. So as a trader, if you're
Mm-hmm.
doing that, then you're asking to lose money. But yeah, if you've traded this setup before, you know exactly how this happens all the
Mm-hmm.
time.
And now, speaking of risk management, have you ever had like a losing streak? And if you had, how did you actually manage it in terms of like your mental psychology and your discipline?
I think every trader has had losing streaks. Even take this strategy, for example. So we operate this in our fund. We have an 86% win rate with this strategy. But even with the 86% win rate, when you're doing hundreds and even thousands of trades, you're
Mm-hmm.
bound to have, 4, 5, 6, maybe even 7 losing trades in a row. So basically, the most important part of trading psychology is just to not have any trading psychology at all. You have this alert. You know that when it gets here, you're supposed to buy. So for people that are worried about their psychology and they want to, maybe risk less or risk more because they're down and they want to make it back, or maybe just go by the sidelines and don't take the trade at all those thoughts are really just hurting them. No positive thought comes from thinking about the setup. Once you have this setup and you know that this is your support, this is where you're going to enter, and this is your resistance, this is where you're going to sell, you shouldn't think at all. It doesn't matter if you're 10 trades in a win streak or 10 trades in a loss streak. When it hits this alert, you buy here. If it closes below, you
You
sell. You
sell.
take a small loss. And if it hits this resistance, you sell for profit. And that's really all that can be said about the risk management and the psychology behind not only this strategy but any strategy. So yeah, always just ignore those thoughts, ignore any emotion related to trading.
Mm-hmm.
If you want to have emotions and you can't help it, go ahead and do it. Just pretend this is a paper account and not real money. Whatever you have to do, just eliminate the human thought process completely from trading and just follow your rules, and you're good to go. That's all it really is.
Man, I felt that to my core. Like, I'm getting to that point where it's becoming robotic now. It feels good, but it also feels, I want to say, it's like leaking out into my real life. This is what trading does to you.
Really, yeah, exactly. I think all traders can relate to that one.
Yeah. Now, what you think? Because I think you just mentioned something that a lot of retail traders get wrong, and it was getting tapped out. What do you think most of them actually get wrong?
Yeah, so most retail traders, they think that there's something wrong with their strategy, or that's usually it. You're not doing the strategy right. And 99% of the times, their strategy is fine. You can learn any strategy. It might not be a great strategy. Maybe it doesn't have a optimized win rate or optimized risk to reward, but it's still profitable at the end of the day. So you should be
Mm-hmm.
making money. Where most of them go wrong is just exactly what I explained. Even though, they'll see a perfect setup like this, literally perfect, but they'll be on a 3 or 4 loss streak. So half of them will say, "Oh, I'm on a loss streak. I just need to skip this trade," and they'll miss out on easy money right here, making it back plus some because the risk to reward is obviously imbalanced in your favor. And the other half will do the complete opposite. They'll see this, and they'll risk like triple or quadruple their normal leverage. And in cases like these, hopefully it'll work out for them most of the time, but that's not really a good thing because it just reinforces their bad habits.
Mm-hmm.
And eventually, it is going to happen again. It's not a one-time thing where someone goes on a loss streak. So eventually, after maybe it won't be the first time, second time, or third time. They'll full port their account because it's worked every other time, and that'll be a losing trade, and they'll just blow their entire account. So those are really the two types of people that I see. And then there's the 1% too that they've tried both ways, neither worked, and they finally start practicing good risk management. That's what happened to me. I think every trader's done this at least once, either over leveraged or under leveraged because their emotions got in the way of their strategy.
No, that's facts. We read the books. We can't. I can't even. We're not gonna tell them what books we're reading. Join the Discord to find out.
Don't leak the info, yeah.
But it's like you get to understand that the systems are there and the systems are bigger than you. The systems are there to help you and not the other way around. You don't help the system. And I don't know if you had one of these moments, but what would you say, like, did you have a trade or a process that you went through that was your biggest?
Yeah, so for me, it was really when kind of the story I mentioned earlier, when I blew my entire $80,000
Ah,
account. I
yeah.
started with 3,000, got it to 80,000 in a little less than a year, and blew the whole thing on one trade. So that for me was when I stuck to one strategy. I started practicing good risk management,
Mm-hmm.
and those two things is really the only things that I changed. But those are also the two most important things. That's about 99% of trading. So once I fix those, there's nothing else you really can do. That's all you need to do to make money. And since then, it's been nothing but, fortunately, nothing but success.
Perfect. That's what we need. So speaking of that trade that took you from 3,000 to 80K, did you have any of those similar trades in the hedge fund right now, or did you do anything like that recently?
So nothing huge. The 3,000 to 80,000, that was over the course of a year. That was
Mm-hmm.
just 3 or 4 very high leverage trades that I was just full porting on. Obviously, when you're managing a hedge fund, you can't be full porting trades. That's easy way to, mess everything up. But what we do is we do a sort of scaling into positions based on certainty and based on certain Greeks of the options, especially delta and gamma.
Mm-hmm.
An example that I can share is one we called out in the Discord even was LLY. I'm sure you remember this one from I think a month
Lily.
ago. I'll actually share this in TradingView. Might be easier if we go to LLY.
I love
All
Lily,
right,
bro.
so this is a very simple trade, and again, this is a slightly different strategy. It wasn't really a squeeze, but it's very easy to understand, so I'll break it down. We have a simple, very simple resistance right here, and then obviously a demand zone right here. And this is literally as easy as it gets. This is like,
For the people first time watching, what is a demand zone if you could explain it to them?
Yeah, so a demand zone is kind of like a support, which is basically there's a lot of exactly what it sounds like, a demand zone. There's a lot of demand in that area, which basically means there's unfilled orders here. So when price goes down to test this zone, those unfilled orders are now getting filled, which causes the price to go back up.
Perfect.
So yeah, this demand zone right here, this resistance right here, this is all you really need to know to take the trade. Uh, you don't really need anything else. But what we also looked at was the RSI and this indicator here, the DSS Brezert. So for the RSI, for those people that do know how it works, there's something called a bullish divergence. But basically, price here was neutral. Technically, it was a very slight lower low here compared to here. But just for the sake of it, let's say price was neutral. But RSI, if we draw this out right here, you can see how it's slightly going up here.
Mhm.
So this right here would be a divergence. This basically shows strength in the stock. So price is going down and or neutral. Either way works. Both options are good. RSI is sloping up. This is your bullish divergence right here. And then over here, we have this indicator crossing. This is also bullish. It kind of works like MAC, but this is also bullish right here. And what we did is we did our first entry right. I'll zoom in right here. You can see this candle right here. The wick entered the demand zone a little bit. So
Mhm.
we entered here and obviously we were up. We're not selling here. We have higher targets than that. Went back down. So at this point, we're down, 10, 15% on our options. So we enter again. It was up and went back down. So then we enter a third time. And you can see how, even though the price, it hasn't really done that much, this is a very narrow demand zone and we're kind of getting in at close to the same prices. We're
Mhm.
having a fairly large position now because we have not one, but we have three entries. So once we have three entries, we're pretty sized in, we're pretty leveraged with the overall portfolio. All our confluences are hit. We have the demand zone. We have some good volume picking up. We have the divergence. We have this crossing. And we sold actually at almost the complete top on this day right here. So on June 11th. One thing I will say that doesn't really apply to futures traders, but for individual equity traders like this who are trading options or just calls and puts, call spreads, debit spreads, stuff like that, what we also look at is option flows. So, for example, one of our entries, I think our last one was here on May 23rd or 27th. It was one of these days.
Mhm.
But what we did is we used something called an option flow, and this shows what other institutions are buying. If other
Ah.
institutions are spending lots of money, then that's obviously going to inflate the price. So we type in LLY. You can sort this. This is an option flow. I'll explain how this works in a second for those of you that don't know. Yeah, okay. So the 27th, this day right here, this was our last entry because we saw confirmation for the option flow. So on the left here, we have the date is the date 5/27/25. This is the timestamp. This is when it came in. This is the ticker. Obviously, we're looking at LLY and, buy or sell. These are all buys. Puts or calls. These are all calls. So
Yes.
here
This was
we
May
have
27th. Yes, it was May 27th for
Yep,
sure.
May 27th. So right here, we have the expiration of the option, which is 7/18/25. The strike price, which is 850. The premium. So this is how much these institutions are buying with. Anything under 100,000 isn't really worth looking at, but here they're fairly normal size, but still worth noting. 200,000, 500,000, 200,000, and so on. Details. This is basically how the calls get filled and how many. So right here you can see they got 618 calls and they were filled for 8.26. Fairly simple. Spot is the price they got filled at. So they
Mhm.
got this fill when LLY was trading at 720.44. And then these aren't as important. That's just a little bit of data on them, but that's all you really need to know. You see a bunch of buys for LLY with a 2 month out expiration date and a fairly high strike price because 850, if we go back here, when this is trading at 722, 850 is all the way up here. So it's a pretty aggressive move. So once that third confluence lined up, we were pretty, but all of our there, we were very comfortable with the position. It was a high confidence play. And the way we scaled out is we don't always take all off at the end of the trade. We like to scale out to mitigate risk. So we did some exits in this area around
Mm-hmm.
764 just because of this slight resistance slash supply zone. And the other exit, like I said, on this candle at, no one pinpoints that we got out somewhere near the middle at 812. And this was I don't remember, it's in the Discord, but something like a crazy 300, 350% return.
I could
Yeah,
let me see. Let me
yeah.
find it. Hold
You
on.
could probably pull it up, but yeah, that's basically it. You don't need 100. You don't need 100 different ways to entry and exit. It's really as simple as it gets.
Yeah, we got up a little bit later. I got up at like 40% profit. So
Nice, yeah, easy profit.
me get other stuff. So do you have like a best trade that you ever made that you could actually?
My best trade in terms of highest percent return
Yeah.
was probably a little bit of luck. It was a while ago, but back in I think it was 2019 or 2020.
COVID.
It's a stock.
Ooh.
Yeah, during COVID, there was a stock called Paramount. This was actually different back then. So back then it was called the ticker was VIAC. It was called Viacom,
Viacom.
and
Ah.
you can probably already know what I'm gonna say, but
Uh,
at this candle right here, I still remember it like it was yesterday. But right here, you can actually see back then I have this trend line from all the way back then that I drew years ago. But right here, I bought puts expiring that same week. So today's a Tuesday. Okay, it was March 21st, and it was a Tuesday, the 23rd, and I sold all the way down here,
that's wait,
and it was
that's March. That's 2021.
yeah 2021 March
March.
23rd, exited
Yeah.
on 2021 March 26th, and these were weeklies, so the highest leverage you can get. My strike price was all the way down here, which in hindsight is very greedy. I probably wouldn't have done that again, but it worked out
Ah,
well.
that's what you
It
meant
was
by
it was
luck.
yeah, it was an insane play. Um, my knowledge back then was limited, so from what I can remember, my thesis was okay, it's extended. This is the most recent support, and it just broke that. I'm gonna short it. And I thought I was a genius. I found out later that it was because of some news, and I just got lucky. But it was a 12,000% return. I put $1,000 into
Jesus.
the stock into the puts, and what's that? 12,000 back, or what's the math on that? I think it's
Bro, I don't.
12,000 back, right?
A
Or no,
boatload of
that's
money.
120,000 back.
That's a boatload of money, bro.
Yeah, so I put in about 1,000, and I sold at around 110, 120,000, and it was, the best trade I took. Like I said, a little bit luck, not really counting on the news happening here, but happy it did. And at the end of the day, it was a long time ago. It was accidental, but in terms of percent return, this trade
Highest.
is, I don't know if I'm ever going to beat that. 12,000% return in 3 days is pretty crazy.
So I don't know if that was it. That could be your best trade, but I think because of what we know now, would you classify that as your dumbest trade also?
I've had a lot of dumb trades, so I don't know if this is number one. But yeah, definitely one of my lesser informed, literally, man. But yeah, this was, 4 years ago now, five. So still unprofitable here. I went on to just lose it anyways, but it was nice while it lasted.
That's I'm not saying like that's good like for you, but it's like it's that it happened so we
Yeah.
could know better what's gonna happen. So I was gonna ask if you lost everything and you had to start over with like 500 bucks. I know how you would actually make back, but give us a description of how you'd actually make that make your fortune back.
Right. So, it's a slow process to do it safely so that you don't also lose that small account too.
Yeah.
But it's fairly easy when you put it in a mathematical standpoint. So what I would do, just for anyone who's out there starting with $500, I'll just say 1,000, so the math is easy. But I would go back to what I showed everyone at first, the squeezes. Let's go back to our example.
Mm-hmm.
I would just spam this setup on every single stock I could find. And what I would do, say you have a $1,000 account, again, just for the sake of math, we'll use $1,000, but alter the percentages to whatever you're starting with. $1,000. what I would do is risk no more than 10% of the account per trade. So what that means is if I'm entering here and I have a 10% stop loss, then I can put in the full $1,000, which may seem counterintuitive because most people are like, hey, that's full porting your account.
Mm-hmm.
Yes, but you
Oh,
risk of a
I see what you
10%
mean.
drawdown. Right, right. And if you're only comfortable with a 5% drawdown, then if you have a $1,000 account and 500, keep that 10% stop loss, and then you're only risking 5%. But whatever it is, decide your risk that you're comfortable taking for your portfolio. Use a simple strategy like this. It doesn't have to be this, it can be any. I would personally use this one. And just keep it simple and then slowly scale up. So once you get to, say you do this for 2 or 3 months and you turn your 1,000 into 3,000, then instead of risking, well, even if you are risking 10% per trade, instead of trading with, smaller sizes, now that your account is 3 times higher, you can trade with 3 times as much. And
Mm-hmm.
it keeps compounding, compounding, compounding. And eventually you get to once you get close to 25,000, you can have basically credit farming strategies running in the background with iron condors, butterflies, stuff where you collect premium passively. And that is also going to compound your growth because while you're still doing these strategies, those passive investments from credit spreads and other option strategies are also going to be generating you income. So when you combine that with the strategy you're using, like squeezes,
Mm-hmm.
it's really going to be exponential very, very fast.
Huge.
That's the plan that I would recommend from anyone started. Obviously, you need to know a good amount about it. You can't just dive in blind
Yeah,
and do it.
that's what I'm
So
saying.
obviously,
Because
yeah,
of what we know
practice a lot or
now.
do paper trading, whatever you got to
Yeah.
do. But that's how I would approach it.
Perfect, perfect. And then before we wrap this entire thing up, if you had form of advice to give to your younger self, what would it be?
To learn more, surprisingly enough, it took me 3 years to be profitable because I was stuck. I didn't want to pay for courses. I didn't want to join paid discords. I didn't want to basically spend any money at all, which
And
to be fair, I'm going through I went through the same people are going through right now. Before you're making a lot of money, a trading course for $2,000 might seem like a ton
uh
of money, and you wouldn't want to do that. But in the end, when I finally did pay for the courses, did pay for the mentorships, that's what really got me across. And obviously do your research because there's a lot of fake courses out there from a lot of people that don't know what they're talking about, but paying for people to teach you and hold your hand and walk you step by step through these things, that's going to be the number one thing that we're trading. That's why we do it for free in the Discord, so that people don't have to pay and they don't worry about
hmm
finding low quality setups. But also continual learning. You're never done learning. Even me, I know I was just talking to you earlier, but so recently, I just bought a course and it was a $25,000 course, which is, younger me would have never spent anything near that on a course. And it was from a top fund manager at Citadel, which for those of you who
Mm,
don't know, Citadel
mm,
is one of the top hedge funds in the world.
yes.
Yeah, so if I'm out here, eight-figure hedge fund, I still have things to learn from people who are running trillion-dollar hedge funds, billion-dollar hedge funds. So what stage you're at, and that'll be the single most impactful thing you can do.
For sure, man. Like, I want to actually touch on that topic before we actually get out of here because it's what really made the difference for me personally. Because what it does, you have to do your research for sure. Because don't just take everything we're saying here on face value. Like, go down a rabbit hole yourself and see what happens from the things that we're actually trying to explain to you. Because we had found mentors that know exactly what they're doing. They show us how to actually get these results. And even today, like the stuff that some of the things we know are actually proprietary. We legally cannot tell you how to, but the reason why it's so scary is because there's a lot of anonymity associated with it, like a lot of shady people. Like it's very hard for you to navigate this type of environment, and hopefully you could actually figure it out and get to where you need to go. But yeah, that's how you got mentorship in any field that you're doing. No matter if it's stocks, cinematography, whatever it is, it always helps. All right. Mr. Stock Market Titan, thank you so much for your time, brother. I appreciate you so much for being in Discord, spreading your knowledge, and we'll just continue to frag out in the stock market. So see you tomorrow, 9:30.
You know it. My pleasure. Thank you for having me.
Yes, sir. Have a good night. All right. Take care, brother.
All right.